Okay, to our first company now, and it's PYX Resources. It's a mineral sands mining company. It's a producer of premium zircon. Its key deposits, Mandiri and Tisma, are large-scale near-surface open-pit deposits in central Kalimantan in Indonesia. Now, over the past few months, it's announced a milestone shipment of ilmenite, its first shipment of monazite-rich zircon concentrate, and it has connected its Mandiri mineral separation plant to the local electric grid. It's dual listed in London and Australia, and the news flow has been plentiful. I'm delighted to be joined by the Chairman and Chief Executive, Oliver Hasler. Oliver, over to you.
Thank you very much, Sarah. Hello, everybody. As a matter of fact, I am in Palangkaraya, Central Kalimantan, at this moment in time. As Sarah mentioned, and I'll assume, like in all the presentations, that you have read the disclaimer. As Sarah mentioned in her introduction, PYX Resources is a mineral sands mining company. We're listed since 2020 on the National Stock Exchange of Australia, and since November 2021 on the main market of the London Stock Exchange. We have two deposits. One is Mandiri, which is in production since 2015. A second one, which we acquired in February 2021 in the same region, which is not in production yet. We mine today for premium zircon, which is our premier product. And as byproducts, we have rutile, ilmenite, and monazite, which contains rare earth. We have a very large resources. We're the third largest producing mineral sands company based on zircon resources. Not only do we have a very large resource, we have also a very high quality resource. On one side, we have a very high assemblage value because of the highest concentration of the minerals we have is zircon, which is the most expensive one of the minerals, which gives us a high natural margin. On the other side, mineral sands, and in particular zircon out of Kalimantan, is very well known for their high whiteness, the low radioactivity, so the low uranium and thorium content, and the low iron and alumina content. So on the top, you will see our Mandiri tenement. It is an alluvial mining, so at the end we're mining sand. What you see in the upper picture is our mineral separation plant. So we have an activity on our mine in central Kalimantan. It's an easy access. It's only 1.5 hours flight away from Jakarta. And Palangkaraya, where we have our main offices, was a candidate city of becoming the new capital city of Indonesia. And as a result of that, we have an international airport, we have hospitals, we have hotels, we have a government paved road all the way to the mine and to our tenement. And as mentioned at the beginning, we even have access to an electrical grid for our production site. Today, we have a mineral separation plant with an installed capacity of 24,000 tons per annum of zircon. So we have the capacity we need for our 5-year plan. We are exporting today. We're fully licensed in both of the tenements. In Mandiri, we're licensed to export all the mineral sands we explode, so we can export premium zircon. So all of it is processed material with higher than 65.5 grade zircon. We do not export concentrate. Our ilmenite has a higher concentration than 45 grade. And soon we will start with the export of rutile with a grade of higher than 90%. We have customers all over the world. We have access to a deep sea port, which is Banjarmasin in the south part of Kalimantan, from where we export all over the world. We acquired, as I mentioned before, Tisma in 2021. It's also a very large tenement with 4 million tons of zircon resources, which is licensed for the next 10 years. So this will be our potential new project to accelerate our total investment. Mineral sands, as the word says, it's at the end, it's an alluvial deposit, so a secondary deposit of minerals. It's mining sand opposed to mining in hard rock, which is a relatively easier and lower capex mining investment. At the end, it's mostly a gravitational process, so we separate their mineral sands from clays and wood and other things you will find in the ground. But it is a separation through spirals, jigs, and shaking tables in order to separate our minerals. There's no chemical involved, so it's at the end of the day, it's an environmentally friendly process. So our main products would be on one side premium zircon, on the other side titanium dioxide, which comes from three sources: ilmenite, leucoxene, and rutile. Since the beginning, so since 2020, we have used the proceeds of our original listing to increase our capacity, and with that to increase our production. We should not forget that 2 of those years were COVID years with very difficult access to the mines. So we're very happy with our results. Year after year, we have been growing our zircon production, our zircon sales, also our revenues. Also as a result of a very strong increase of zircon prices. From 2020 to today, prices have gone from $1,400 per ton to $2,000 per ton. So it's a category of products that has had a very strong increase of price, mainly because of the increase of demand and the lack of supply. We have achieved for the second year an underlying EBITDA, which is positive, very unusual in the mining industry to achieve that in only the 3rd year of production. And as I mentioned before, considering that 2 of those years were COVID, we have about $8 million of cash on our balance sheet with no debt. Last year, we closed with increase of production, zircon production of 31%, zircon sales of 24%, and total sales increase of 20%. And we expect an improvement this year. We will be showing our first half results mid-September. So as I mentioned before, you can see on the map, we're in central Kalimantan. Kalimantan is the Indonesian part of the island of Borneo, very well known for the mining industry. The Chinese started to mine for alluvial diamonds and gold 2,000 years ago, followed by the Dutch. Today in central Kalimantan, the main mining is coal mining and mineral sands, as well as gold. In the middle of the slide, you will see what makes our deposit so special. On one side is the very high tonnage, 14.9 million tons of heavy minerals, from which 10.5 are zircon. In particular, if you look at most of the mineral sands mining companies in the world, they're ilmenite miners with byproducts of zircon and rutile. We are zircon miners with byproducts of ilmenite and rutile. This is important because zircon is the most expensive of these minerals. We are low capex. Most of the projects have to invest a very heavy investments in roads and ports. We already have access to roads and to ports that today are used to export coal, iron ore, and palm oil. So the investment is already done. So the only focus has been investing in the capacity of our production. On the slide of the left, you will see the comparison of our concentration of zircon and titanium dioxide compared to the rest of the industry. You will see that Mandiri has a concentration of 4.8% of zircon and Tisma 3.3%, compared to most of the mines in the world with 0.5%. The result of that is a high assemblage value, which at the end, the only thing it means is every time we take 1 ton of ore out of the ground, we have a higher margin. This is a natural given margin. Zircon is a very interesting material. It's used in heavy industry. 50% of the zircon is used in ceramics. All of you see it at home. What covers your tiles, dinnerware, and bathroom furniture, what makes it white, hard, scratch resistant, and chemical resistant, that is zircon. For the same reason, it's used for airspace programs to cover the shuttles, or used for teeth. It's also used for foundry industry, chemicals, refractory, the bricks that are in the glass and the iron or in the steel melting industry are made out of zircon. It's also used now for high-tech applications. The biggest growth of zircon, growing at levels of about 25% of the applications, are high-tech applications. So zircon is used today for semiconductors, batteries for electric vehicles, solar cells, etc. And a result of that, zircon is in most developing countries considered one of the critical elements and minerals required towards the transition towards carbon zero. This chart is extremely important for future valuation. You will see I'm very bullish about zircon prices going forward. The industry and analysts have predicted that there would be a lack of supply for the actual demand. This was delayed by 1 year because of COVID, but in January 2021, prices started to grow, as I mentioned, from $1,400 to $2,000 per ton, where they are today. If you look at all the zircon projects going out, they're not enough to cover the future demand. The largest zircon miners in the world, Iluka in Western Australia, is reaching the end of their mine life. Over the next 2 years, they will convert into a rare earth mining company. The second largest one is South Africa, which is Richards Bay from Rio Tinto, is also reaching the end of their mine life. And if you look at all the new projects out there, and you assume that they will occur at the time they have announced and the volumes they have been announced for, it's still not enough to cover for the actual demand. So we believe this lack of supply, or the imbalance between supply and demand, will grow with a CAGR of 2.5 to 3%, which has a huge impact on price. Also very interesting in our industry is the 5 main players cover 72% of the supply. So it's a very disciplined area. So there's not enough supply and very few players in the market, which brings a lot of price discipline. Zircon is a commodity. So as every commodity, prices go up and down. But if you look what has happened over the last 20 years, and even if you cut through the commodity super cycle, prices have steadily been going up. And we expect that to continue like that in the future, especially when the world comes out of the economic crisis they're going now. And we predict an important increase of the demand. The same titanium dioxide, which is, so the source for titanium dioxide is ilmenite, rutile, leucoxene. They're all used for the same. You use ilmenite and leucoxene to generate synthetic rutile, and all the rutile is used to produce 90% of its pigmentation. The rest is used for welding rods, and then to produce titanium, mainly for the construction of airplanes. Exactly the same players. All the players that produce zircon are the players that produce ilmenite and rutile. They come together within mineral sands. And the same thing like in zircon, titanium dioxide is considered another critical mineral required towards the transition to carbon zero, with very interesting, innovative applications. So we have a very clear focus, and we can still increase the valuation of our company. We still have huge areas of extension for drilling. We have started this, as we predicted this year, we started with the sales of our byproducts, ilmenite. Shortly, we will start selling rutiles. With this increase of production, because we have been absorbing all the cost within zircon, so the ilmenite and rutile sales will be at 100% margin, which will increase our profitability. So we're projecting very strong results for this year, 2024. At the same way, we're the only industrial miner in Kalimantan for mineral sands, and we're producing at international standards, following all, we have joined the UN Global Compact Initiative, following all the sustainability targets like you would expect from any world-class manufacturer. But the same way we acquired Tisma and have 2 tenements, we're continuously looking at new opportunities with the target of consolidating the mineral sands industry in central Kalimantan to increase our production of zircon, rutile, and ilmenite. So in summary, we have 2 world-class tenements, one of them already in production with a very high assemblage value. We have customers all over the world. We started in 2020 selling mainly in Europe. Then in 2021, with the crisis in Europe, we shifted towards China. Last year, we shifted towards China and India. So we are covered worldwide. Selling is not something where we lose our sleep on. All of our sales have always been committed for since the beginning of our project. So everything we produce is already sold. It's sold in US dollars at an FOB basis, so we have no risk going forward. The biggest customer, the biggest country as far as consumer of mineral sands is China. Indonesia is a Belt and Road country, so a strategic partner of China. So China likes buying Indonesian products. They know Kalimantan very well. And so going forward, we still believe that we have significant opportunities, not only to grow our production, but also to find new tenements. The next step after having increased the volume of our sales now is to drastically reduce the cost of production by switching from third-party contract miners to doing our own in-house mining. So we have been doing the first tests. So going forwards, we expect to start mining ourselves and that to be able to reduce our production costs from this year, $1,500 per ton to around $450 per ton. And with this, I'm very happy to take any questions you might have.
Oliver, you have excited me. It's the very first time in my career where someone's talking about 100% margins. So you talk about the 100% margins from the sale of rutile. So when do you anticipate these sales to begin?
Well, as you saw, ilmenite, we started in February. It's difficult to predict exactly when we will have the final license. The next step, that we have managed to change the legislation in Indonesia. So we were fundamental in pushing the government to change the regulation. Now that has passed, we have sent our samples to the mining department. So we're waiting for them to analyze them. So they have to recognize that it's over 90%, and then we should start selling. I hope it will be this year.
Very good. And I'm wondering if you'll be selling to your existing customers or if you've already started to market to alternatives.
It will mostly be alternatives. So most of the zircon is sold to millers of fused zirconia customers. So the ones that are buying rutile and ilmenite are different customers, but well known by the industry. I mean, everybody in the industry is selling to a relatively small amount of customers. So we all know all the customers in the world. There's not new hidden customers around. And our distributor, Wogan, an English company, very well known in off-market sales of minerals, has been in the market for many, many years. They used to be the distributor of Aluka, so we have access to all the customers worldwide.
Okay, so you've used that word worldwide and global throughout your presentation. So I'm understanding the global footprint of your customers. I'm just wondering about your global footprint, the intended footprint, because right at the end there, you said that the idea is to consolidate the mineral sands resources in Kalimantan. So I'm just wondering, once you've done that, is the vision to explore and acquire mineral sands businesses elsewhere in Asia and beyond?
It is a possibility, but I believe very highly in focus. Today, we have a very interesting project with Mandiri, with still a lot of things to do. We produced 12,000 tons last year. Our project calls for a production of 48,000 tons. And like I mentioned, we have a huge opportunity to drastically reduce the costs. After that, we have a second tenement, which can help us to accelerate the project, which is Tisma, and access to other ones. So before we look to the rest of the world, which is a great opportunity, I believe we have to excel first in our part of the world in Central Kalimantan.
I'm just wondering what opportunities have opened with a recent accolade, a Gold Environmental, Social and Governance Excellence Award from the Zircon Industry Association. And when I read the RNS, to paraphrase, you said ESG is not just a badge of honor, it's a way of being within the corporate world.
Yes, we were very proud about that award. Particularly in Central Kalimantan, where ESG is not something that has arrived, and we're probably the only miner that applies this. From the beginning, we used it as a base on which to build our business. And I think a lot of the results are because of the way we are doing things. At the end, we have to deal with the local population. At the end, we're very close to the local schools. We hire all of our people locally. With that, we have very good access to the local government in Central Kalimantan, but also with the central government in Jakarta, because we're not only a mining company, we also stand for all the programs the Indonesian government is looking for. And at the end, we do it because that makes our place a better place to work for our people and for the generations to come in that part of the world that still has a lot of things to learn and to develop. Okay,
so I've spoken to you quite a lot this year, and it has been focusing on accolades. But Steve says, "Hi, Oliver. The share price has dropped in recent weeks. What near-term news flow can we expect that will help this recover?"
Yes, but at the end, I'm seeing the share price dropping, saying like you, on one side, that was caused by a fund in Asia going bankrupt and liquidating all of their assets. They didn't do it on a very disciplined way and just sold everything they have. At the same time, in today's world, all mineral sands mining companies have dropped in share price, which doesn't mean that the value of the company has going down. The next big news should be the license of rutile. We should also present our results in September, which we expect to be very positive. So there's still very good news to come. And the continuation, I mean, there's nothing miraculously new. We will increase our volumes and we will announce that. We will reduce our costs, which we'll be announcing, and you should be seeing in the results.
Okay, Darby asks, how much capital is required to get the second operation into operation? I'm not quite sure which second operation he's referring to.
That means Tisma. I guess what they're referring to is Tisma. I said it's not in production yet. We have the advantage that we already have a project that is in production. So at the end, we will repeat exactly the same thing we did in Mandiri. Our idea today is to start with 24,000, a mineral separation plant at 24,000 tons, immediately go into our own mining, and then to grow to 48,000 tons. So our projections today is a minimum of $15 million and $25 million to have the full project, probably from cash to production. So from the moment we receive the cash to when we start producing, it would take us around 2 years.
Okay, Martin asks, how do you manage your information technology and reporting, especially for the government requirements of reporting?
We have a structure first within Kalimantan. So our offices are in Palangkaraya, where we have our accounting, human resources, and other services. And everything that's finance and cash, we control out of Hong Kong. So I have a very small team in Hong Kong to control cash, and the rest we do locally out of Palangkaraya. Reporting is not very difficult. What it is, it's very disciplined. You have to make sure you report on time every 3 months to the local authorities. At the end, we're mining for 3 products. So it's not the complications, it's more discipline.
And in terms of discipline, are you finding that there are any disciplinary challenges working in Indonesia?
Sure they are. At the end of the day, we are mining in the jungle, very far away from everything. This is probably the most remote part of Indonesia and in Kalimantan, which makes everything much more difficult. But I mean, at the end, there is not enough mineral resources. There's not many new places to find it in the world, and this is the new source of mineral sands in the world. So we have to adapt to what we have.
And how would you describe where you're operating in terms of its alluvial richness?
At the end of the day, I mean, there's mainly two sources. Most of the mines you would know in the world are next to the coastline, so they were moved by oceans. We're next to the Kahayan River, so these are sediments that came from the Schrader Mountains in the north, and then were moved with the beds of the river. So what we find is the pockets that are left behind as the river moved through the area.
So you mentioned the sale of some stock by a fund. Steve's asking a follow-up question. He says, has that bankrupt fund now sold all of their holding? Are you aware of that?
We believe so. And I believe I mean, right now, if we see, there's still a push of about 3 million shares, which is a very relatively small amount. We have 461 million share in circulation, which should then take pressure away from the stock. But again, my responsibility and the one of management is to focus on the operations, and I'm sure the share price will follow.
Okay. Ash asks, what about the possible 30 million shares waiting to be converted by a US fund?
But they don't, if you look at it, it's at $100 US per share. So I'm not sure that those will be converted.
Okay. So you had your milestone shipment of that monazite-rich zircon concentrate to that customer in China. That's in the public domain. I'm just wondering about the cash generation from that first shipment and whether there will be follow-up shipments from that.
Sure, it's a byproduct, Sarah. So as we produce zircon, which is our main product, we will always have byproducts of ilmenite, of rutile, and of monazite, and then we will continue selling them as we produce them. And as we have done today, everything that we produce is sold in advance. So we have a contract for everything we produce. So in the moment we get a lot of 100 or 200 tons, we ship to Banjarmasin.
Okay, final question for me, because I'm trying to visualize the operations that are going on in the jungle, and I'm just wondering about personnel. Is it difficult to get the trained up personnel, the workers in Indonesia, or whether you're training them up, whether there is a rich talent of jungle ready operators?
Yes to everything you said. Indonesia is a mining country. It's one of the largest mining companies in the world. At the end, we are in a remote area. So it's a combination of both. It's a very young country. Indonesia is one of those countries that still has a very large growing young population. So it's easy to find workers. Trained workers, usually we have to get from other areas of Indonesia, from other mining operations, and then we train them. I believe we have the best work opportunity in the region, so people are happy and proud to be part of our company. So we have never had a problem to attract people.
And we're also very happy that we've managed to get you onto our webinar. I do appreciate that it's the wee hours where you are. And I just want to say thank you very much, Oliver Hasler, the Chief Executive and Chairman of PYX Resources. It's always a pleasure. Thank you.
Thank you very much, everyone. Bye-bye.